If you haven't seen the first part of this video, click on the link that's in the top right of the screen, and then come back and watch this video afterwards. The next company we have is TFI International. This company, as I mentioned before, is a trucking and logistics company. They actually operate 4 different divisions in the trucking and logistics industry. They cover the packaging and courier, the container transportation sector, as well as less than truckload and truckload sectors. And this stock to me is a dividend play, as currently it supports a 2.74% dividend with a low payout ratio of around 25% or so. And also the dividend growth year over year is around 10% in the past 5 years. And with a 10% year over year growth in the dividend, this is pretty amazing for a company if you hold it in the long run and you watch that dividend grow by 10%. Let's look at their balance sheet to see the health of this company as they're trying to weather this pandemic. We can see that the current assets are sitting just under $800 million, while their current liabilities are $633 million. That gives them a current ratio of around 1.33 or so, and that's not too bad for this company. They don't have as much cash as I would like to see. However, they have trade and other receivables. They're basically short-term accounts receivables that other companies owe them this kind of money. They should be able to recuperate around $600 million in the near term. They should be able to cover the current liabilities. And on top of this, management, as mentioned, they have a credit facility that they're able to use and draw from if they need to in order to keep the business running. And although they might take on some short-term loans, this will definitely help tie them over until the pandemic is over. Their business will definitely continue to boom as GDP climbs back up to normal growth rates. And if we take a look at their income statement, we can see that their revenues have been increasing slowly year over year, as well as the gross profit. And you might see there's a bit of a decline from year to year, but the general trend is upwards. But another promising thing that we can look at is their net income. This is their income after the costs to generate the revenue, as well as any operating expenses like paying wages. So we can see that management has been very responsible with the expenses that they have, and as well as the number of employees that they hired, to make sure that the net income or the bottom line is increasing year over year. Now, going a bit into what their business actually does in the 4 segments that they operate in, one thing to know about TFI International is that they're basically a parent company. They acquire a bunch of small little logistics companies and bring them under their larger parent brand. And they don't change the name to TFI International because these brands have definitely built up customer relationships with various other companies, and they have a special way that they service those customers. So TFI International acts as a parent company to these subsidiary brands, and those brands are able to operate somewhat independently, and these smaller subsidiaries are able to offer services that their specific customers require. In the packaging and courier segment, they have 6 divisions, and what this segment is basically those parcels that you get at your door, which are generally under 150 pounds. So these divisions really service the regular average consumer or small packages going to businesses. The next segment that they operate in is a container transportation segment. And this is essentially transporting those large shipping containers that come off of the big boats and bringing them to warehouses for them to be unpacked. And in this segment, they have 2 divisions. The next segment they operate in is the less than truckload segment. And what this is basically for companies who don't exactly have enough to fill up an entire truckload for whatever they're trying to transport from A to B. So a lot of smaller and medium businesses, they might only have maybe 1 or 2 pallets of product that they've manufactured, and they need to move it from the manufacturing facility to either a shipping or warehousing facility or to other retail stores that they're selling their product in. So they'll contact these less than truckload services to take maybe a pallet or 2, and what TFI International subsidiaries will do will consolidate a bunch of shipments that are less than a truckload and be able to fill up an entire truck and bring various customer shipments to their respective warehouses. The next segment they operate in is the truckload segment. This segment, they service larger customers that manufacture millions or even hundreds of millions of products and need them shipped from their factories to either the wharf or to a warehouse or to even retail stores. The types of customers they might see in this segment are grocery stores or just larger box retailers like Walmart or even Costco, for example. And the fact that TFI International operates in 4 different segments of the trucking and logistics market allows them to be able to cross-sell services across these segments. So for example, a retailer like Walmart might use all 4 of their services. So it started off with Walmart shipping their product overseas from China to, let's say, a wharf in Vancouver. And they might contact TFI International and ask them for a container shipping service. So TFI International will bring a truck which takes the container to a Walmart distribution and warehouse center. And from here, they'll have a bunch of different containers entering this warehouse, and Walmart will contract their truckload service to bring larger amounts of product from this massive warehouse to maybe other warehouses all over the country and Canada. So one truck might go from Vancouver all the way to Toronto, let's say. And from there will be a Toronto warehouse where they consolidate more products. And then from there, Walmart might contract TFI International and one of their subsidiaries for a less than truckload service to bring products from this warehouse in Toronto to one of the local stores. And lastly, Walmart also operates in the e-commerce space, so they might contract TFI International's package and courier businesses to do some smaller shipments for customers who order online. So we can see that TFI International operates in all different segments of the trucking and logistics industry. So if one of them gets hit, they're able to recuperate with another. And one more note on the large amount of brands that TFI International operates under. Let's say one of the brands has some sort of mishap with one of their customers. This will actually help prevent TFI International's larger brand be affected, because only that subsidiary might be affected and get a bad name. But most people don't look into the parent company and what other subsidiaries that parent company operates. So this protects TFI International if there's any sort of mishap with one of their brands. If you've made it this far into the video, please consider smashing the thumbs up button to help with the YouTube algorithm, as well as subscribe and hit the notification bell to get updates from my channel as I continue to release more stock videos for you guys. If we look at the trucking industry in the past couple of years, we can see that from a report made by the ACT, they actually said that in 2019, the trucking industry had a huge slowdown as there was a headwind that came on from Trump's trade war. And with the whole trade war happening, there's less trade happening and less imports happening from China. And therefore, the trucking industry definitely got hit hard. And TFI International saw their growth go from double digits to around 1% in 2019. They still grew and didn't shrink, which is a good thing. Other companies might have shrunk in the sector. But for the trucking industry, typically these downturns in the trucking industry happen for 1 or 2 years. And the fact that we're already 1 year in, history shows that we should be out of this by next year, maybe another year at most because of the whole pandemic situation. But I think we will get out of this, and the trade wars can't go on forever. We definitely need to continue importing goods into North America to be able to support the entire economy, and as well as feel the North American need for materialism. Another thing I want to highlight is how management has been reacting to the whole pandemic situation and how they're managing their financials responsibly. The C-suite and the VPs all took a 5 to 15% pay cut during this period because they saw that their employees would suffer, and they didn't want to take advantage of this situation and continue to earn a full salary. So they decided to take a compensation cut. And this shows management's responsibility and how they care about their employees and how they care about the business as a whole, because they are the top earners in the company. And the fact that they're taking a pay cut, they're showing that they believe in the business long term and that they're willing to ride it out in the short term and take these hits on themselves, and in hopes that the business will recover after this short-term pandemic. And now going over the interesting tidbit of how trucking relates to GDP and what TFI International can actually tell us about this whole pandemic and how it's affecting the economy. So in the recent earnings call, management actually shared how the business has been doing almost week by week in the past month or so. So they saw in the last week of March, the last 2 weeks specifically, they saw around a 17% decline in shipping orders. So this was a pretty big hit on their business. However, in the first week of April, they actually saw a 39% decrease in their typical sales volume. But as an investor and keeping up with the news, we probably expected something like this just because everyone's staying home and a lot of businesses have shut down. However, there was a bit of light in what management said. Management reported that business volume didn't decrease as much as the first week. And management said that although they had a very poor first week, the second week and the third week didn't decline as much. So we can see that we're probably close to a bottoming point, and that eventually And eventually, as the economy starts to open up, the amount of business that they're going to receive will uptick. This stock currently is at a fairly low value as they have a P ratio of around 13.5. And typically this industry supports P ratios around 26 to 30. So I think right now TFI is at a fairly good value if you're looking to make a entry into the stock right now. And one last thing I want to mention about TFI is you guys are probably thinking, what's going to happen with autonomous driving and how is this going to affect TFI International in the long run, or even just the general trucking industry in the long run? Well, here's what I have to tell you guys about autonomous trucking is that it actually won't completely replace the truck driver's job because there are many jobs that the truck driver takes on, not just driving the truck. They have to do the maintenance on the truck. They also have to do the loading and the unloading of the truck, and they have to sign papers and all the other stuff like that. The fact that there's less stress on the truck driver and they can probably just sit in the truck and maybe do other useful work, this could increase the efficiency of the truck driver while they're on the road, or it could also mean that there's a reduction in wages for truck drivers. And because there's less stress on the job, this might mean that wages for truck drivers will drop over time because there's less demand on the body as well as the amount of skill and stamina that it takes to be a truck driver. So therefore the barrier to entry to become a truck driver is not as high, and therefore there's more supply of truck drivers, and when supply is higher and the demand stays about the same, then we know that the price goes down. If you enjoy this content and want to hear more from my channel, again, please consider subscribing to my channel, as I do tend to make stock videos every now and then, probably once a month or so, on 2 different stocks, as well as I have a Shopify series where I'm going over this hot growth stock in Canada. If you want to check that out, just click the link right up here. I currently have 2 videos talking about Shopify, and we'll be releasing another one in the coming few days as Shopify releases their earnings. And if you haven't seen, Shopify stock has actually run up quite a bit in the past day or so. They actually jumped today from around $900 to $977. And I think my prediction for the stock is that Shopify will actually drop on earnings because the stock has already run up so much, whereas the broader market is not running up as quickly. So I think Shopify, people are just buying on rumor and they're going to sell on news. If you have any comments about these 2 companies or any questions, just leave them down below in the description. I read every single comment and I respond to every single one that requires a response. Keep up the grind and have a great day.